All right, welcome to this live session where we are going to be looking into the long term. That's from the daily time frame. Remember, this session is for the part-time. All right, this is the part-time live trading session where we are going to be looking into the very long term to see if we can find any possible valid setup for us to trade at this time. Okay. All right, so let's take the charts one after the other, looking into the daily time frame to see what price are left for us. Okay, first is the euro against the sterling pound. This is the 1 hour time frame. The market is left with about 30 minutes. Okay, right now 28 minutes before it is closed for today. This is actually the daily box indicator, and you can see the entire trading event that happened for today. So we are just left with current candle to close before the next trading day begins. So for the euro against the sterling pounds today, we actually got a trade here. This was a valid trading opportunity that we took right here. That was the entry. For those of you who were in the Telegram group, you will also be involved in this valid trading opportunity, although it was part of the range trading approach, the new trading approach that we got this trading opportunity. So we made some nice pips in this setup. Okay, we made all of these pips, but to me this is just the beginning. Right now we have cashed out 50% of our profit, and their stop loss has been trailed to our entry plus spread. So this is now a risk-free trade. All right, like I said, I am not going to be analyzing anything in the shorter time frame. So this analysis is for the long-term trader, the part-time trader who will come in here every single day to check the type of price action that has happened in the daily time frame. Now, this is the daily time frame of the euro against the sterling pounds. What has really happened here for today? Let's zoom in this chart so we can get a clearer view. All right, this is a problematic zone. You can see how price reacted off that level before that push to the downside. Eventually we got the pullback to that area, and that was where price found as what resistance. That area resisted price very effectively. You can see the bounce right here, and we got this candle push to the downside. This is a very bearish candle right now. Okay, it's a very bearish candle, but we are not going to take a trade here again. If you are concentrating on the euro against the sterling pounds for today, sorry, for the next trading day, you should be looking for short opportunities. This pair should be pushing to the downside. Actually, there is no need looking into the longer time frames, sorry, the weekly time frame, because the weekly candle is not yet closed, so we will not be coming there. But for the sake of discussion, if you look at this, you will see that price is more in a flat bottom triangle in the monthly time frame. So we have gotten this swing up and down. So the next directional bias is to the downside. So you should be very very hesitant taking long opportunities in the euro against the sterling pound. So for now, price is bearish. We got a nice rejection candle in the daily time frame, this one right here, but we are not going to trade this because we are looking to take a similar trade in the sterling pounds against the Swiss franc. Both of them are correlated, so we'll be taking this one instead of the euro against the sterling pounds. All right, directional bias for this pair is to the downside for the next trading day. So we are expecting to see possibly a red candle push to the downside for the euro against the sterling pounds. All right, let's move into the next pair to see what we have waiting for us. The sterling pounds against Australian dollar in the daily time frame. Quite sadly, this is a pair that we are traded but closed this entry at a break-even position. Price made a pullback to that particular area that has been holding price as former resistance on resistance. There we got the breakout. This is the pullback, and right now price is now pushing to the upside. Actually, we closed this trade for some small profit because we got involved again in the euro against the sterling pounds. So let's define our key levels of support and resistance. Daily time frame, this is resistance. We can keep this level here as support, nothing more. It is more of a range. Prices are likely going to retest that level. Excuse me. Or it is going to bounce off this area and coming back down for a flat bottom triangle. Okay, but for now, with this level here as former resistance now acting as support, the directional bias for the sterling pounds against Australian dollar for tomorrow is likely going to be to the upside. But since we do not have any valid entry signal here, we are not going to take any trade in the sterling pounds against the Australian dollar. There is no valid entry, but you can see that price is turning around. Price gave that a breakout, pullback, and it seems to be turning back up. Okay, so no entry here, no valid setup for us to trade. Now the euro against the American dollar, let's see the daily time frame, where as you can see here, again this is just a little sideways behavior for the past few days. So there is also no valid trade entry for us to trade in the euro against the American dollar. So close this chart. If you are a long-term trader, there is nothing here to trade. The directional bias is even very unclear. It is very unclear as per what directional bias we should be expecting for the euro against the American dollar for tomorrow. So avoid this chart for now. Right, the Australian dollar against the Canadian dollar, let's see the daily time frame. Price is still hesitating around this level of resistance. That's resistance, and this is support. So price is trapped within this zone. Again, there is also no hint of the next directional bias, so avoid again this one. There is no valid entry for us. We need price to break above this level or close below this level. All right, the American dollar against the Canadian dollar for a few days now. You can see price hesitation around that area. Okay, we have anticipated a level of support, but for this number of days and formation that we are seeing here, there is no hint as well as to what directional bias price will be taken to, whether we are going to be bouncing from here up to the upside, or we are going to see price breaking through to the downside. Okay, so no directional hint for the American dollar against the Canadian dollar. Avoid this pair as a long-term trader. All right, next one, New Zealand dollar against the Japanese yen. This is the daily time frame. Let me take out this line. Let me just remove this from here. Okay. Initially we had price within this channel. We had price within this channel. Let's see that swinging up and down. Then the breakout happened right there, but the breakout is not happening in a good momentum. Look at the quality of candles just below that level, just below there. Low quality candles are not happening in high price volume. So we are going to remove this. Let's redefine this level. We can keep our previous level here. Let's keep our previous level here. Excuse me. All right, so that is it. This previous level, we got price. We are respecting that level there as support, here as resistance, currently as a support. So this is a key level that has been acting both as support and resistance. This one we can just keep it as an area. It will be simple enough. Okay, let's keep this one as an area. All right, so as you are seeing the New Zealand dollar against the Japanese yen, you know prices are reacting off a key level of support. That's it, a key level of support. Any hint for price to push to the upside? Well, let's zoom in this chart and see again. Okay, you see this candle? This is a rejection candle of this level of support. So this is actually a hint that price should be pushing to the upside for the next trading day, which is tomorrow. But for the type of candles that we have gotten for the past 4 days, right there is just low market volume happening around this area. Again, we can find some problematic zone around in here, around that area. So this is once resistance, support. Okay, so if we placed our buy stop entry right here, we'll be trading against that problematic level right there. So for the New Zealand dollar against the Japanese yen, although price is giving us a hint of the next directional bias as being to the upside in daily time frame, but because we are finding some problematic levels around here, we are not going to take that trade. Okay, if you must trade this pair, then look for a buy opportunity for tomorrow. Okay, so that is it. Let's move on to the next one, the New Zealand dollar against the Swiss franc. Similarly, this is just the same thing here. In the daily time frame, this is a level that once acted as resistance and now acting as what? Support for the New Zealand dollar against the Swiss franc. Actually, we were expecting a pullback. We're expecting price to make some pullback to this area. Can you see that? That's the area there, which is former support. If price makes that pullback to that zone, this is where we will be waiting to click on our sell button. You should not be hitting on your sell button around in here for now, because price has just made that push. We need some pullback somewhere around in there before we can make another push to the downside. You don't want to sell at this particular low against this area of support, although it is a very low it is not a very high level of support. The quality of this level of support is quite low, but you shouldn't be trading against that level of support. Okay, so the best course of action here is to wait at this particular level for you to once price makes that a pullback, this is where you want to hit your sell button in the New Zealand dollar against the Swiss franc. Currently price is trading around an area of support, and we are seeing some hesitation we are seeing some rejection of that level, it is possible that the next candle will be a push to the upside, but this is not clear enough. The rejection is not so severe, but be careful clicking on your sell button. For us, there is no valid setup, so we are not taking any trade here as well. All right, next one is the sterling pound against the Canadian dollar. This is the daily time frame. Here we have this trend line. It's a solid trend line, this one here. We got this area broken before. Price is still finding support around that zone. Let me see. In the weekly time frame, actually I'm not supposed to come here, but you should know that price still has some room to the upside, so it might be pushing to hit this next level of resistance on the sterling pound against the Canadian dollar. The directional bias is still to the upside. All right, so in the daily time frame, what's happening here? If we draw this level of resistance, if we keep this one here, you'll see that price has messed around that level. This level here has been broken up, broken down, so it is no longer valid. We are going to take out that level. Okay, on this one, the next directional hint is not clear. Anything can happen. Just try and avoid despair for today. Although we might be finding across most of those sterling pounds across is for tomorrow, we might be finding the London open breakout setup, most of them for a reversal move, like the sterling pounds against the Canadian dollar. Remember, we had a nice push to the downside for 3 days. If price gives us that sideways Tokyo range in here, just above this falling trend line, we'll be looking for that reversal move against this original push to the downside. Anyway, that's for tomorrow. That's for the intraday trader. All right, so as a part-time trader, there is nothing here to trade. Just avoid it. The sterling pounds against the New Zealand dollar, this is a similar price behavior. Right here we saw price respecting this area. And look at this. Okay, we'll look at that. P Lodge, we'll look at that. Okay, so the sterling pound against the New Zealand dollar, this is a small level of resistance that held price before. We had also analyzed this before, that price was finding resistance around that area. Let me zoom in this chart. That's resistance there, and now finding it as support. Price is turning to the upside, but again we might be finding some resistance around this zone. So price is trapped here, even though we are seeing that turn around to the upside. The hint is not clear enough. There are also roadblocks, level of resistance, level of support. We will not be trading anything here. All right, next one, euro against the Australian dollar. Let's see that. Daily time frame, quite a mix. Just look at this. Several candles around this zone. Avoid this. There is nothing valid to trade here. The American dollar against the Japanese yen in the daily time frame. Well, price is trading below that counter trend line, and we are seeing some hesitation around in here. It is likely that price will be pushing to the upside, so you also want to be careful going short here. Look at today's candle. Can you see today's candle? That candle right there is more of a hesitation candle. Price is likely to push to the upside, so avoid going short on the American dollar against the Japanese yen. It is not a good setup for us, so we will not be trading that. Sterling pounds against the New Zealand dollar. Let's see the daily time frame. Well, price has eventually created a range formation here. That's it, a range formation. Price is trading just below the lower boundary, just around the lower boundary of this range. Look at today's candle. Can you see this candle? That is a solid rejection candle of this level of support. So earlier this week we had this sell limit order here coming from the weekly time frame. So right now we are going to delete that order. We are going to delete that. We have seen that price is within a range. Okay, so we're actually looking for this type of price behavior within ranges. Remember, as a long-term trader, you are looking for price reversals around trend lines, around the ranges, standard ranges. You are looking for that around the Fibonacci retracement zone in the trending market scenario, things like that. Okay, here we are seeing this around this range, so it's a valid setup. We are going to be placing our buy stop order. Right, so let's go ahead and place a buy stop order here. The high of this candle is 1.3234, so the buy stop will be 1.3239 level. 3239. Okay, that's it. I'm going to change this color. The stop loss can go either around in here, just a few pips below 50% of that pin bar. It can be here, or a few pips below the low of this pin bar, somewhere in here. Either of these is valid. So let's just place it a few pips below. You don't need to do all of those calculations yourself. Just approximate. Just approximate a certain level. Let's keep it around the 1.31. Okay, 1.3156 level. So the buy stop order is around the let's say buy stop. It's around the 1.3239 level. The stop loss is around the 1.3156 level. That's the stop loss. Okay, so in order to take this trade, we need to calculate our lot size. So what's the value from our entry to our stop loss in pips? This is about 84 pips. This is about 84 pips. So using the lot size calculator, it's already attached in my screen on my chart, so I'm just going to edit the box. So the lot size calculator, I am editing that. What's the stop loss value pips? 84 pips. 84. I am ready to risk 2% of my account on this trade. So I'm just going to accept that. Click OK. Alright, so let me just see if I can adjust this. The lot size calculator is projecting. I am sure you are not able to see the result right here. It's assuming, sorry, it's recommending 1.6 lot size for this trade, depending on my account balance. So if you have the lot size calculator, you should be able to see that. All right, right now you should be able to calculate that. It's the most easiest way to calculate my lot size, and that is what I use for every single trade. So I'm going to take the trade, new order, It has recommended 1.6 lot. It's a pending order. It's a buy stop order at price 1.32 39 level. Stop loss at 1.3156 level. Okay, I'll place the trade right now. Order is placed. There is no profit target. We are going to keep the profit target open, and as you know, if price pushes to the upside, triggering our entry for tomorrow, we are going to cash out 50% of our profit as tomorrow's candle close, trail our stop loss to break even position, and as the second candle close, possibly for another push to the upside, we are going to cash out the remaining 50% of that trade. So far, this is a good bounce. It's a solid bounce candle, so we are going to keep that order. Okay, so that is it. That's the only trade for now that we have. I'm going to remove this. Okay, New Zealand dollar against the Canadian dollar. This one, you will see that price is trading around an area of support. This is a support there, just around there as well. We are having that twin spinning top. This twin spinning top is a sign of exhaustion. The price is likely to push to the upside, but they are low quality signals, so we are not going to take them. In the very short term, that's the 1 hour time frame, you will see how price has hesitated a lot around that area. This is a very difficult market condition to trade. Okay, New Zealand dollar against the American dollar. This is the daily time frame. Steady push to the upside. This trend line has been damaged right now, so we are going to delete this trend line. We can keep it here. Just this is the last level of formal resistance that has been broken. Price might make a pullback. Price might make a pullback, but for now, just so much market confusion going on there. Okay, euro against the New Zealand dollar. In this one, we have so much market confusion as well. You can see in the daily time frame, we had projected this channel formation in the 4 hours time frame. That's the swing there, another one. Several days market confusion. Price is likely to come back down, retesting that lower boundary. So be careful going long in the euro against the New Zealand dollar. In the weekly time frame, you will see that confusion quite clear. Look at the type of candles we have gotten for several weeks. Really bad candles there. American dollar against the Swiss franc. Be hesitant going short as well. Price is trading below the monthly level of support, but we are seeing some hesitation there. Be very careful. Price is likely to come back up. No sign yet of the next directional bias. Australian dollar against the Japanese yen. This one is another one that we got that rejection of that area of support. This is a good rejection candle. The hint here is that the next directional bias is going to be to the upside. That's the hint for the Australian dollar against the Japanese yen. Anyway, that's not going to be that easy to just push to the upside. It's a small range. It's a small range. So if you are interested in this pair, trading this pair for the next trading day, you should be looking for buy opportunity in the Australian dollar against the Japanese yen, just within this range in price behavior. It's too small, really not for us. It's too small. We will not be taking this trade. Okay, sterling pounds against the American dollar. In the weekly time frame, remember this line? We talked about this previously. That level there that acted as resistance. Price now came back to retest that line. Can you see that? From above right here, that's the breakout. Now acting as support. I think the market has just closed right now. So upon that retest, the price is finding support to push to the upside. Well, for tomorrow, or sorry, for today, because the market has just opened, the next directional bias is to the upside, but that might not be solid enough for today. Be careful going short. You might get price a push to somewhere in the air, then come back down. Not a clear one. Euro against the Japanese yen, much confusion, plenty hesitation. Avoid this chart. The Australian dollar against the Swiss franc, daily time frame. We were actually waiting somewhere in here for a better pullback before going short, but price just stopped the pullback around in here. We saw that 2 candles pullback before the drop. There is nothing to trade here. Canadian dollar against the Swiss franc. Weekly time frame, this is an internal level of support. Solid breakout Friday. Let's wait for the pullback. Somewhere here is where we'll be looking for aggressive short entries. Okay, nothing more. The daily time frame, there is nothing to trade here, but be careful going short with the Canadian dollar against the Swiss franc. Australian dollar against the New Zealand dollar. Weekly time frame, we got that rejection of this level. See that candle? That's a bullish candle. Price for this week should stay to the upside, but it's finding some troubles. In the daily time frame, this is okay, 4 hours level of support. We have gotten the breakout. Price is now making the pullback. From here on, it might be pushing to the upside. Avoid going short the New Zealand dollar against the Australian dollar against the New Zealand dollar. We might get a little pullback, and from there on pushing back up. There is nothing to trade for the part-time trader. Euro against the Canadian dollar, quite a mix. Plenty of hesitation there. Avoid this chart. Euro against the Swiss franc. This is the key level of support right now. We are waiting for pullback to that zone. We want price to make some pullback to that area for us to look for short entries. Australian dollar against the American dollar. This is a very steep trend line. Very steep trend line. This pair is still bullish. We might see a little push again to the upside before the fall. Lots of indecision here. Just avoid trading here for now. Okay. Canadian dollar against the Japanese yen. Again, another messy chart for some days. Avoid trading here. Sterling pounds against the Japanese yen. This is the daily time frame. Price made that bounce for today. It seems we got a trend line. Let's take this line from here. Okay, that's the daily trend line. Price came really close, but didn't hit that level. If you also apply the 3SM indicator, you will see that price bounced off the dynamic area of support right there, which is also an area where the Fibonacci retracement is located. Our key Fibonacci retracement levels, that's the 38.2, the 50, and the 61.8. That was why we got that bounce. It's a valid bounce for the 3 SMA setup. That's previous swing high around in here, coming around that level, but quite mixed. And remember, we are already involved in the sterling pounds against the Swiss franc. Okay, we are selective, so we are not going to take any trade here. If you must take this trade, price is likely to make some pushes to the upside for today. We're not going to take this. Swiss franc against the Japanese yen makes around this level of resistance. This is really mixed right here. Avoid trading this chart. The next directional bias is not clear. There is no good hint for us. Okay, now let's look into the forex factory. Sorry, the forex currency index. All right, now the green light here is absolute strength. Absolute strength. Okay, absolute strength. We are having absolute strength coming from more from the sterling pounds. Sterling pounds. That's the sterling pounds is the strongest of all currencies, followed by the Swiss franc. Is the strongest. Okay, and that is why the range, the sterling pounds against the Swiss franc is likely to remain in that daily range, swinging up and down, because we are trading two strong currencies. All right, others are still flat. Canadian dollar, Australian dollar are weakest. Nothing more. So for now, we have just the sterling pounds against the Swiss franc order. That is what we are going to keep. Where is that? Let me see. The price just turned down immediately. This is the order that we have. So keep that for now, for today. All right, so that's basically all. In the next part-time live trading session, that's before the market close for today, we are going to analyze this pair again, also looking at what has happened to this trade that we have placed. Okay, so just one trade, no correlated pairs, and that is how the market should be traded. If you have questions or contributions, please feel absolutely free to ask them in the live chat window, and we will discuss them there all together. Okay, thanks for watching. I'll be talking to you again in the most active live session, also the most active trading session, particularly for the intraday traders. Bye for now.